Yellow, yellow.
What's going on?
Just another day in paradise, my friend. How are things?
They're good. Yeah, another day of trading sideways, right?
I would entirely say it was sideways. I mean,
No, yeah, kidding.
I was like, I'm definitely, the long term, my long term holds are, we're up for 2 days in a row, so I can't complain. Let's see. Oh, Kringle, there we go. Sorry, buddy. Yeah, Halister, what you're asking? Yeah, Ryan Cohen is on the no-fly list. I apologize.
I know. I saw that. I was just like, no. It's like I know it fits with the. It's perfectly in character, but I just saw a little. I got a little sad there. Saw the picture.
There
RC looking so nice. It's just like, man,
coming up again.
List, so.
It's coming up again. There's someone actually made that for me way back in the day. Back on like day 3 of CitadelAir. Back with the like Kokrak Kramer crew. D knows them. DDP. Arrow, Aeroflip, and that was my original crew back in the day, and they made a whole slew of those, and some of them actually have my actual photo. Someone found a photo of me and not the plane, and they put a picture of me in there, and all sorts of other like hijinks. So those were fond memories.
Yeah, no, I think it's awesome. I don't know. It struck me. What can I say?
Yeah, I have to make some changes to the repertoire. I have a ton of memed photos, and the videos don't really do justice playing in the background unless there's like audio, and there's no copyright issues because these are all ones that I own or created rather. So. But the Kenny Lisa is one of my favorites, and he's holding Kringle right now, actually. Although I forgot the audio is actually delayed on our broadcast, but look for Kringle in the in the YouTube feed. Kenny Lisa is holding him very close. Kringle, how are you, sir?
Hey, good evening. My mind is blown tonight.
That makes 2 of us. I'm going to
3.
A bigger door.
Were you there?
A bigger door to the Matrix has opened.
House, are you there as well?
Oh yeah, I asked a question.
Oh, I must have been. I was away from my AFK for about 5 minutes, and then naturally that would be the window where you asked a question. For those that did not attend Kringle University this evening, Kringle had quite the guest on, and I'm going to shamelessly plug it because he may not, because he's a humble guy. But we'll send out a link at the end of our cast to 2X. I think it's Kringle free. It's available for what 5-7 days. The replay of it.
Yeah, it's in the archive content, so it's for 7 days exclusively. So the interview involved a next market maker. You used to operate in the 90s, and the practices are not so different as of today. So yeah, of course we have the shiny toys and algorithms and whatnot, but the standards of market making hasn't really changed.
Yeah, that's what was truly interesting, was hearing that it was like, that despite the new technology and new systems and everything, and he was like, oh, well, yeah, we don't have that anymore. We used to call it this, but like fundamentally, the system has not changed circa, I forget how far back it went, but just some of the the terminology and things like that. I mean, you can better explain it than I can, Kringle. But
Yeah.
what was his book? It was like Tales from a Market Maker or something like that. I forget what his book was, but
Well,
Yeah, they're not just not focused on making profits, but it's just more like delivery of supply and inventory to retail, right? Yeah, of course they make business on the side, like receiving order flows and processing orders for retail, but there's according to his opinion, there's no way that retail could beat market makers because market makers they operate at the level at the highest levels possible in trades, right? And what he said is that market makers are the ones controlling the flow of level twos, which is kind of true. So the amount of retail, no matter how many shares that you're buying, like 100 shares or 1,000 shares, right? They don't really make an impact on the market according to his valued expertise, right? But when we're dealing like trades of bigger size, when we're talking about millions, if not or 500,000 of shares, right? Well, ideally, they go through an investment banks or a prime broker to deal with that kind of volume. So that's what we're dealing against. And he has a point about, retail. Yeah, it's honorable for retail to get structure, but to bring actual changes or a fair playing field, we get that, but that requires bipartisan support and billions of dollars of lobbying politicians to fight for us, really. So yeah, I mean it's a very big piece of the pie to deal with. But whatever that you have heard on social media and whatnot, mo- I'd say most of market makers, I'm not talking about the shady shit that they're doing behind the scenes. We know that they're already doing that, but most of the tactics that retail are thinking are actually legal on level trees. So we're talking about naked short selling. That's legal on level trees. They can short to retail. So short to retail, that's their business model. They provide the supply to us while they are taking the risk exposure on our behalf, and somehow in the future they would have to balance out their books and hedge themselves through the bid and ask spread. So that's how they make their money, and that's how they generate liquidity for their funding accounts.
Yeah, it was really interesting. I mean,
that's a lot of content.
Just to bring it back, like
Yeah.
we were we're talking about like earlier this evening, like Kringle on his Discord on the Kringle Academy, we had a guest on there. It was VwapTrader or JJ. He has a podcast that's called Confessions of a Market Maker. And he was a market maker back in the 90s. He's really great resource, like in terms of understanding market profile, market structure, and he's a like really straightforward guy. Again, not to plug other content too much, but I mean, he really breaks things down, will answer questions really in a straightforward manner, and I think all the three of us here listened, and we're all kind of blown away, I'd say. By a lot of the things he had to share. So definitely worth checking out. But yeah, I mean, lots happening today in the markets. Obviously, we had the after hours action last night, like big runs this morning, followed by flagging off, lots of movement. But I was joking at the beginning, right? We traded sideways. We had the FOMC meeting today with Jay Powell speaking, and I don't know, I found it hard to listen to, as I always do. I get the sense that he's kind of asleep at the wheel. You hear the same things month after month, right? Like he did announce some tapering. So I think beginning next month they're going to reduce asset purchases of government-backed bonds by $10 billion. mortgage-backed bonds by $5 billion, but left it really open-ended in terms of interest rate hikes. Those are still going to be. He's waiting for full employment and sustainable 2% inflation. So we will see when that happens. But I guess in essence, party on.
Party on, Wayne.
No time for puts. No time for puts.
No. I unfortunately I was otherwise occupied, so I didn't, and I knew you would be catching his I'm going to call it monologue because it's very rinse and repeat and say it enough times and it'll become true and you'll believe it. But sustainable 2% growth. And did he indicate when we'll actually have full-time, like unilateral full-time employment? I have a lot of people that would love to know when we'll be fully employed or back to at least utilization of over 90% or something.
He did not. He got a few questions on that, but didn't really have answers for us. I mean, he did say, demand is high, but demand might be artificially high because there might be constraints in the supply chain. So he didn't, he pulled back from the word transitory. We didn't talk about inflation being transitory, but it may just be a function of supply chains. It was very insightful. I mean, I think a lot of things that just people are so unaware of.
Enlighten me. What am I unaware of?
No, I'm being
extremely
sarcastic.
Oh, okay. I was like, do we not? We have a supply chain logistical issue, but okay. All right. What am I missing? Obviously,
he just won't use the word transitory. I mean, that's what it is. I mean, he's basically saying that he thinks inflation is being driven by the supply chain shortages, and that it will work itself out as those get corrected. Which, I mean, big picture, there may be some truth to, but I just feel like at this point we're far ahead of that 2% inflation target, and waiting around for full employment to begin raising interest rates might be a mistake. But I mean, that's just my take.
I mean, I concur based on what I'm hearing from you, but I'm not sure how long I would be holding my breath for full employment, and that's kind of ambiguous at best or vague. But I'm going to have to dig into that later just for my own curiosity, because that is almost comical.
Yeah, I mean, it'll be great for the markets until it's not. And I think that that's something that JJ mentioned earlier. I mean, he seems to think it's going to be catastrophic when it finally happens, and I know a lot of people share that sentiment.
Well, the question is actually when, and which is it should be terrifying. The question is when, but yeah, nobody really knows. I've seen a map of the ports in the western coast. So, speaking of California, essentially San Francisco and Los Angeles. I mean, they usually operate the cranes, right, for the containers. They pass containers like hundreds of them per day, and we only have like 2 to 3 cranes operating per day with a few containers, and they have a problem. I mean, accepting products through customs are actually easy process, but the problem is for the containers to get out from the ports and have new ships coming through to process their goods. So that's where the issue is, and that makes a lot of the shipping businesses to increase in prices as products never arrive on time to their stores. So that's a real problem there. And we're talking about not only national inflation, because the Fed obviously they print money, but also local inflation of prices of goods. So it could be oil futures, prime materials for other products like semiconductors and such. So yeah, these are things that people should look for, and there's a lot of demand spiking up for, I mean, for many sectors. And on the side note, if you are into several banks, right, you may have access to research reports from different firms or your banks, and they have conducted researches about certain sectors where they believe that they can be possibly more profitable in the next few quarters. So if you check those sectors, you know that financial sectors, banking sectors, and energy sectors will be a whole lot more profitable in the winter season because more demand spikes in those times of the year, right? And as for the tech sector, of course, while we're talking about a tiny growth of the SP 500 based on the tech, but not that much because everything has already spiked up, and they don't even believe that they're going even higher that much. So they're doing those sector rotations depending on the seasons and the demand of the market. So yeah, it's something to look out for.
Yeah, no, that's interesting. I know you mentioned that the other day. You mentioned the energy sector kind of
Yeah.
coming into the rotation. Which, what do you follow commodities much? Like, do you follow the steel market at all? I know there's been kind of a lot going on with that. I mean, it's one that I follow like relatively closely. I know HRC prices like seem to have peaked. They're starting to come back down, but I know a lot of that business is really contract based. There was some news, over the weekend about um, an agreement being reached between the U.S. and the EU in terms of some of the tariffs, and they're still trying to prevent, dumping into the U.S. of, foreign steel, but they are reducing tariffs on some EU steel coming in. But I don't know if you had any insights on that market. Not to put you on the spot, you may not.
Not really. I don't really follow commodities or futures that much, but I do follow them on a very, very long term. So we're talking about 15 to 20 years worth of analysis, right? But we're talking about really like short term, mid term, like 6 months to 1 year or 2 years even. Those kind of products are a bit more unpredictable, and that does not give you enough leeway to make any major moves to make a lot of profit on those particular parts of the market. So I can see like oil and water to be a hell lot more valuable in the future. Let's say maybe 5 to 10 years, because we need oil to build a green future. It makes sense, right? Because we don't have green for green energy to build green energy. So we need oil to create that green market, and enough time for that to be self-sufficient, right? And well, if you see the situations going on in Florida and in California, those are the two states that are providing a lot of food for the United States, right? They are one of the biggest suppliers. Yeah, especially in California, where we're talking about like shortages of food in some areas where demands are spiking, and the water is needed to continue production, right? And water, as more demands increases, water obviously uh, the price increases as well. And of course, when we're talking about water, we're talking about drinkable water, or we're talking about tech into removing salt from the water, desalination process, removing salt from water. So those are tech that could people could look at. And also, when we're talking about foreign territories like let's say Saudi Arabia, or pretty much in those countries in particular, right? Water is in really short supply. And when we're talking about war, like in Afghanistan or Iraq, you could see like patches or squads of soldiers protecting places of interest, and those are precious resources. It could be oil or water, and people in villages, they are fighting for those resources because that's all they have, right? And eventually, when we're talking about 20 to 30 years, we're talking about perhaps 2 or 3 generations ahead, then that's where possibly people would be fighting for those, because these will be eventually much more valuable in time. So that's how I see things. But that's an overview 15, 20 years, 30 years ahead. So if you're a young trader, perhaps you're going to make good money by retirement in those futures and commodities.
Yeah, no, it's interesting. I mean, water's a big one where I haven't looked into enough. I mean, it's one of the things that I know we've talked about here. Obviously, Burry was into it, years ago, and I mean, I think
Yeah.
it does have, a lot of long-term potential. I guess for me, I haven't looked into it enough. I haven't done enough research, but I'm almost not sure where to get started, right, in terms of where to get exposure to some of that. I know you mentioned desalination rather. Yeah, I mean, that would be something to look into.
Yeah. Or maybe in the short, mid to early long term could be the coffee play, right? Going along on coffee, because they are troubled countries in America. So we're talking about El Salvador, Guatemala, Argentina. These are the suppliers of Arabica beans, right? And also Cuba. Cuba has been facing a lot of harsh times because of the U.S. embargo of trades and how they are ongoing under severe hyperinflation that forces their people to fight for their rations, right? And Cuba, of course, they are known for their Cuban beans, obviously, and they are also one of the main suppliers of coffee, alongside the Arabic supply by the Latin America. And of course, there are Asian industries building up in Africa, where they are planning to build coffee plants in Western Africa. I believe it was it Sierra Leone or Kenya? I'm not really sure, but in those countries, right? They're looking into developing Arabica beans at cheaper labor costs, because coffee be pricing up, right? Um, where we could be talking about Asian countries like Vietnam, or it could be some parts of India. They are also one of the leading suppliers of Arabica beans in Asia, but they are also flooded because they are limited because of the floods per season. So they cannot provide us supplies anymore. And considering that we have this supply chain problem, well, obviously the issues are much more amplified. Um, and also in the beginning of COVID, right? In those Asian countries, even in America, we import those. I'm sure that you have heard the terms bubble tea with the tapioca beans, right? We import them through the Western port in the United States, where those Asian shops are selling those bubble teas with tapioca, right? And tapioca, unfortunately, we have really, really short supply on them. And that is these local Asian shops to increase prices of bubble tea, because there are no besides Asia or China or whatever supplier that they have been authorized to import. And all of the stuff that has been stuck in the ports of Los Angeles or San Francisco, well, obviously the supply chain that we have explained, everything is stuck there essentially. And there's no way to import those products in due time, and that forces demand to spike up for those kind of products. So these are the kind of plays I could look up. Yeah, supply chain is bad, but it's all about supply and inventory and seeking out demand on the market to make good plays for your portfolios, essentially.
Yeah, definitely. Well, so switching gears a bit, I mean, there's this one company that like sells video games and you know, a lot of other really nice merchandise. I saw, you know, they had some pretty significant price action today. There was Method Man tweeted out something about being up at a NFT conference.
Was this Radio Shack?
No, Fry's Electronics.
It was, well, no, it's the last blockbuster. It was the last blockbuster in the franchise. It's like having this mega electronics sale. That's the one, right?
Yeah, yeah, that's right. They sell used VHSs. Yeah.
But please do go on.
No, I was introducing the topic. I mean, it was interesting. I mean, there's a lot of I mean, it's getting me a little bit hyped. I mean, there's a lot that's coming up this week. It seems really interesting. There's been. It's not that I've been disconnected from it because I haven't. I've just been watching for a while and I haven't seen much news that I think is significant. I haven't seen much, even out on Reddit or on the different social media places. Like, it seems like these past few weeks there just hasn't been a lot to talk about. But coming into this week, it certainly has a different feel about it. We saw a lot of, I mean, from an AMC perspective, we saw a lot of options exercised. I don't know if you guys saw that, but there were a lot of Form 4s that came out where earlier this week, a lot of the AMC execs exercised a lot of their options, and so got some shares earlier this week. You know, with GameStop, obviously we have the price action. With the NFT conferences going on, just the RC tweets, like there's a lot of new theories floating around. Like, there's a lot of news over the weekend too. There was, I mean, not necessarily mainstream media coverage, but I don't know. I'd call it like alternative media coverage, where there seemed to be an influx on some of the subreddits and alternative media sources, and a little bit of new energy to it. So the algorithmic theories, in terms of the way some of these things trade together and seem to be lighting up together, and the chart patterns are kind of fitting on top of each other. I don't know. I guess we didn't get a chance to talk about it because the last time we talked was Monday, but obviously we saw Bed Bath & Beyond with some news last night. Like, they flew up, and then the big headline today was like, oh, look, all the meme stops are running as a sympathy play. It's like, what does that mean? A sympathy play? It's like, oh, I remember January when all these guys were running. Well, maybe I think I'll buy it again. It's like, yeah, no, I think it's more than a sympathy play. There's a little bit of something behind that. It may be the ETFs, which I know Kenna's really fond of with her mind maps. It may be swaps. It may be just the nature of algos, but I think it's time to buckle up.
Agreed. And it was the it's I think it's, as I was trying to explain to the missus, that I don't feel numb. I haven't been numb to the entire thing, but it just feels like the proverbial frog or lobster in the pot, that where you're slowly raising the temperature, and the frog or lobster is blissfully unaware that they're about to boil. And I feel that's at times that's me and GameStop and AMC, because it's been a couple of years, at least for me. It's been a longer time, and especially it seems like eons, even just from January. But I am experiencing some new excitement or vigor, especially with with a lot of the new restrictions that brokerages have put out, margin requirements. What was it? I'm trying to pull up TDAs was particularly interesting. I don't know if you saw those that was mentioned, but specifically they cite, for example, they released this yesterday. They changed all stocks, across the board are marginable, but their margin requirement is, where in the past they used to obviously vary based on their volatility or whatever their risk assessment was. But across the board, they're saying all stocks that are that you can margin, the margin requirement's 100% across the board as of November 2nd, 1 p.m. Eastern. With specific regards to securities CAR and DWAC, zero short selling is permitted. No limitation on long calls and long puts. They go into custom option spreads and things like that. But let's see, and then they go on to say AMC. They kind of did what something like Robinhood. We may also implement additional requirements on opening trades on options that expire. GME, short selling of stock is not allowed at this time. No additional requirements on long or short options, but they reserve the right to implement additional requirements on opening trades on options the day they expire. And then they go on about the restrictions about OTC stocks, but it's akin to what was it, the Robinhood the other day, where I saw some posts that I know their after hours and pre-market is limited, but I think it was after hours maybe yesterday where Robinhood issued, people were getting error messages when they were trying to buy AMC. Something about due to volatility that they said your order's been queued for to be not even pre-market, but your order's been queued for at the bell, if I'm mistaken, unless I'm mistaken.
That's interesting. Yeah, I mean, I don't know that I saw that. I did see some of the info that you're talking about on the TD margin requirements. I mean, it was secondhand. Like, I mean, I don't use them, so it's not. I didn't read into it too deeply, but yeah, I mean, I definitely saw that they're not allowing shorting, which I mean, it ties into something that JJ was talking about earlier, even with just looking at VWAP throughout the day and using that to tell a story. Obviously, like with a market profile, you can see it a lot more. But if you look at the way GME reacted today, like it got up there, and then when it came back below VWAP, it couldn't come back up. And I mean, essentially what he was saying is that indicates a shortage of supply. Like there is a short supply. And I mean, everything's pointing to that. I mean, I think we've all known it for a long time, having watched it. But to see that kind of volume, get it down there, and then not come back up, I mean, that means supply is short, and it feels like, at least to me, that the digging of the hole continues.
Further down the rabbit hole we go, or inevitably, the kick the can down the road. Everyone's using that phrase now, but I mean, it's delaying the inevitable. In all likelihood, we all have to pay the piper, with that old euphemism rather. The question is, what is going to be? No one really knows, but I'm interested to know what the actual catalyst is, because no one can say, oh yeah, this is going to take off on well, there are some folks that I like to call out on Twitter that proclaim they're experts and say that it'll happen on this date and the security will hit this dollar amount by end of day and so on and so forth, and they're consistently wrong. Inevitably they're going to be right, because a clock is right twice a day at some point, but we don't know exactly when, but you can only kick the can so far before, I mean, it's kind of like a business loan. I mean, at some point, like, if you've maxed out your line of credit with the bank, but you're still making money, bank may roll you over, increase your credit line some more, and then you utilize that, and then at this point they really want to make sure they're investing in your business. They want to make sure they get paid, so they'll maybe advance you some more money because they don't want to lose the whole thing. But at that point, I would argue they're throwing good money after bad. But at some point, risk management steps in and says no mas, and we're calling that loan. In this case, I would be interested to see what that catalyst is. It could be any number of things, but I don't know. If anyone has thoughts, questions, comments, concerns, please feel free to raise your hand in the Twitter space. I see the YouTube chat as well. Post a message. Standard disclaimer, not financial advice, trust but verify, and please, please, please do your own due diligence.
Indeed.
I guess biggest lesson tonight is if you want to compete against the big boys, use their tools against them. And of course, those tools are not free.
No, I was looking up at one of the because I think Kringle, you asked about access to like level 3 data, and he had cited a particular program. He's like, well, if you've got access to this XYZ, then you pretty much almost have level 3 data in a sense. And if I messaged you and I kind of dug into it, it's cool because it integrates with Interactive Brokers for me, so I could pay the monthly fee and have it integrate. It's not like raw level 3 data. You kind of have to compile all this stuff, but
right.
It was interesting nonetheless. But like you said, it's not free. It's more. I don't know. For me, it'd be an extra $500 a month just for their data package on top of the $200 a month I pay Interactive Brokers for data. And with a NAV of at least $100K to start to use their software. So
yeah, some of the softwares they like, some are depending on the subscription fee, they could provide you some lagging data. Often it gives you like 10 minutes or 15 minutes behind to read the flow. Some tools are offering higher premium prices on their subscription package. They let you see trade either live or maybe like a few seconds late behind, and that doesn't give you like pretty much on par of market makers or prime brokers use, but the margin is still there. But that gives you like a fair advantage against those who are using lagging data 10 to 15 minutes. So yeah, those are the kind of differences.
Yeah, the only way I could see it being, trust me, well, I was listening to the talk. I was reading through, like being like, can I does this make sense? Can I pull the trigger and use one of the trading algos that I've kind of played around with and tested on IBKR before, and set up some different things, because you can link their API with Interactive Brokers and then just basically let it rip. Like it supports HFT. It makes me a little nervous because my ability to program something correctly is questionable at best. But I think the only way it would make any sense for me to do something like that, or to get that competitive edge, I would need the algo doing the trading. There's no way the human element could, with that advantage, the human element isn't fast enough. But
it's funny because I'm not sure if you recall the part of the interview where VwapTrader or JJ said that he doesn't really care about the fundamentals, right? And he doesn't watch the line of any stock, so he just watches the inventory of a particular security, right? And he's just gonna hedge if needed to protect his investment. But it's all about supply and inventory of stocks that they currently have, and of course, based on whatever they could raise up to generate liquidity on the markets, right? That's what they do, and they provide the stocks to people. And And interestingly enough, he said that VWAP is pretty much the basis of, or the only indicator that all institutions use, but more than anything else, he uses heavily on market profiles to analyze any securities out there to his disposal. And any tools like RSI, MACDs are just toys, including volatility.
Back to his point that, I mean, the tape never lies, right? Like
Yeah.
when you look at VWAP, I mean, it's literally like volume weighted average price, right? So it's the price that things are trading at and the relative volume that it's trading at. And so you can see, you know, based off the prints where the real action is. And when it, you know, he mentioned 3 standard deviations as well. So I mean, I know it's pretty standard for people that follow and, you know, trade on VWAP, but
yeah, that's correct.
Yeah, I mean, it's just when you look at it, and I mean, the market profile is really interesting. I mean, I've seen some of his other stuff. Like, I think it's pretty much impossible to get like a market profile tool without, you know, paying something for that subscription. But it's so interesting to me, like the way it works, and I mean, it feels like based on listening to have some insight to really be able to read it. But it will show you, I mean, where people are trapped, especially in a short term. I mean, it does feel like a real short term trading tool, and so that's the other thing is listening to some of what he said, and I realize that everybody here hasn't listened to what we're talking about, so it may be a little bit in the dark, but it raised some questions to me, just more of a longer term investor, because I do some swing trading. I really don't do a lot of day trading, but he mentioned he doesn't hold a lot of things overnight. So I mean, I think market profile is really, really interesting for trading in the short term and seeing where the inventory is, like where the supply is. But it may be less useful as a longer term tool potentially.
Yeah, I used CitadelAir back in the day, but that is a harsh life. I mean, you gotta wake up to like 3 and 4 in the morning, and you gotta read overseas news, and by 9 o'clock you're already done with your trading and just going back to bed. And that requires a lot of chartings and obviously market profiling. What I like to use, I mean, there's a free option. So Thinkorswim from TD Ameritrade is a great trading platform with their own market profile. Of course, there are paid services like Quant Tower or Sierra Charts is pretty good too. Yeah, but yeah, the market profiles are very, very interesting, but that gives you some kind of layer into your TA essentially to know where you could probably hedge or make a trade based on your market exposure to markets. That's great.
Yeah, you're spot on, Kringle. Obviously, I mean, for many reasons, but I would argue that the my foray into day trading, which I very rarely do at this point, it's mostly swing trading. Day trading, would the path I was at, it was I was probably going to lose more in a divorce than I was in day trading if I continued with that schedule, because the missus was not happy with with
the
lifestyle. She was like, "No, this is fine before we live together," but I didn't sign up for this. So plus I'm getting older, and I just was like, this is killing me. But so that's why I've kind of adapted to pivoted to swing trading. But there's a certain nostalgia for those days at certain times. So I will get up and do some, the pre-market where you can move a security with like sometimes very little money, as I think JJ talked about. And in any event, I digress.
Yeah. Yeah, swing trading is great because yeah, I mean, if you're on a certain trend, then more likely it's gonna stay on that trend. So either bullish, neutral, or bearish, right? And you get to study. You could estimate the earnings of the said company. You could speculate how which sector could be affected and whatnot, and you just make your trade. And obviously, options that work the same way, but you have a bit more leverage and more buying power per se. To of course, that goes with the risk. So more speculation to swing trading, and day trading, it's more fundamentals and whatnot, and what you believe and what's gonna take off intraday trading essentially.
Yeah, so I know any questions, comments, anyone that has anything to say? I know we got a couple of requests, and sorry, I know people had dropped off. I don't want to interrupt when somebody's on a thought, but yeah, I mean, if anybody has anything, feel free to request, and we'll bring you up.
Yeah, my apologies. I saw someone up there, and then by the time I went to go bring them up, they disappeared. So whoever wanted to speak before, please raise your hand, and one of us will get you up here. In the live chat, Eric was asking what what the coffee is that monkeys eat and then digest, and then someone goes and picks and roasts. I think he's referring to kopi luwak from Indonesia. It's the most expensive coffee in the world, well over $3,000 a pound, I believe, was the last time I checked. That goes back a few years. But it is phenomenal and delicious, very smooth. But it's also alarming to know the exact dollar amount of that you're drinking. A $3,000, $3,000 coffee. This is. I love coffee. I'm a coffee guy, but that was a once in a lifetime thing for me.
Yeah, that's insane. That's, I don't know, a little gross for me, but hey, let's take William first, because I know he had requested before, and we didn't bring him up that time, so we'll do William, and then Brian, you're up next.
Proceed.
Hey guys, yeah. So, is it okay if I talk about AMC?
Yeah, for sure, man.
Absolutely.
Anything.
Broad market. You can talk about whatever you want.
So I've been following AMC since March, hold or whatever. So I feel I just want to go a little like a month back into like history or whatever. So I'm pretty sure everybody in like the beginning of September, when volatility was an issue, a lot of people like sold their call options, right? And I'm pretty sure everybody was worried about the price action and stuff like that. I know I was, but I wasn't phased by that, because by September, I've been there since March. I've been through a lot, but it was a concern. And now I'm like seeing the price action increase, and it's exciting and everything like that. And I'm still bullish, whatever, but I'm like speculating. I'm like, and so I did sold a lot of call options, and then I just recently bought, when was it, when the other day when it dropped to like 34, 35. I'm like, you know what, let me just test it out. So I've been like positive ever since, and now you guys are giving this info like brokers are like restraining people from like shorting the AMC, whatever, right? So I don't know. I'm speculating, whatever. I just want an opinion, just to brainstorm about it. Like, it seems a little like bullish to like buy more. Like, I don't know, to trap them or whatever. I don't know. Like, how do you see it?
Well, when we're talking about retail brokers, right? What you're talking about is, brokers like restricting people to short those securities because they are really high risk, right? But understand that we're talking about retail brokers. But institutions, they don't use retail brokers. They use prime brokers because they deal with massive volumes of stocks. So they have bigger capitalization and bigger risk management. So they are allowed to short stocks instead of retail brokers. So they are very both different, right? That's why Citadel Securities, they short to retail, right? So that's based on their supply. But as you already know, the volume is really, really low because, well, not as late, but in the past, let's say 2-3 months, like you have seen that the volume is really, real low, and not a lot of people are exchanging their stuff because people are mostly holding their securities on AMC and GME, right? And there are not a lot of buyers, not a lot of sellers, so there's no volume. But as demand increases, and when it's time to spike up the prices because of the settlement dates, because the market makers or institutions, they get to decide whenever to settle those settlements and eventually drive up the prices. And that's based on the algorithms, and algorithms are always based on their inventory and risk exposure to the markets, right? It doesn't mean that they are forced by someone else to cover their stocks. It's just that based on their risk exposure, they would based on the algorithm, they would have to cover on that day because that's what the algorithm says. It's not a human. It's not a human like making those trades. It's essentially a machine, a computer, right? Because back in the 90s, right, it's all manual. There's a market maker. There's always a middleman, like settle those trades between a buyer and a seller through ACNs, right? But now market makers these days, it's just machines. We're talking about gamification of apps. It's instant, but you're dealing with credits. It's not real shares, right? They are shorting to retail. Shorting to retail is like the prime business model of market makers. So they can naked short, essentially, but legal. It's on level trees, right? And they keep issuing those. We're in this credit system, and as long that, unfortunately, I have to say this, but as long that retail demand is astronomically high, even supply is low, well, all the brokers, right? All the brokers and the market makers are like, hey, I gotcha. Hey, I gotcha. Hey, I gotcha. I got you a share, but it's a fake share because you keep asking for it, so they keep shorting it. That's their business model. They don't have a choice because that's how the market structure is built. You may not like it, but that's how it is built. It's legal. And as much that, and of course, there's a limit to how much the market makers and the brokers would have to short the stock and give the supply to us. But eventually, in the future, based on the algo and based on the inventory, they would have to cover bit by bit, like stepping the shorts like Tesla, right? And of course, short squeezes happen, like not short squeezes, but the event like GameStop happens because the algorithm failed on that day, and somehow their risk exposure got like publicly exposed into the markets. And of course, the brokers, they didn't know what to do with the market makers, so they may have been like shady dealings behind the scenes, right? And obviously that forced the brokers to limit the buying button, essentially, to decrease retail involvement and make sure that institutions fill their orders properly while they are bleeding at the same time, because their code or algorithm failed on their side. Yeah, so it's just about market structure and how it is built, essentially.
And given the variables right now, who would you say is more at an advantage, retail versus like market makers? Would you say?
I'd say that the market makers, they control the flow of trades, because retail, we may trade like 50, 100 shares. It doesn't really matter because we're not dealing with prime brokers. Prime brokers, they deal with sizes, right? And us, we're on a credit system, on a fake share system, because we have the stock itself. I'm talking about AMC or GME, right? They have very low institutional inventory to provide you stocks.
So would you agree that volatility forces like a sort of like a reconciliation of inventory on the shares on the market maker side?
Possibly, because the market makers, based on the demand of the markets and their inventory, they are basically one of the main players behind the volatility of a security.
Hence, like September was volatile. Now we're seeing a price action. Would you say that's related? There's correlation there?
I cannot say for sure.
Okay, thank you.
I mean, I would say though, on the other side, I mean, it does get interesting though. I mean, I do think these are kind of unique cases. When I mean, again, listening to everything I heard like earlier this evening, it's like, yes, they do have a lot of tools in their toolbox, but they take those shorts with the intention of being able to push it the opposite way, and then being able to profit off of the trade, right? And so while they are generally in control of the price action, like if they take those trades at levels that they don't necessarily want to for the sake of creating liquidity, they can also get trapped in, I would say, like extreme type circumstances. Not to say that that's 100% what's going on here, but because I mean the price has fluctuated like significantly, but when they get to points where that, like they are trapped, like early January, for example, I mean, do you think that when they're in the sense of creating liquidity, right? Did they cover a lot of those at 40? Probably, but in terms of the funds that were net short. I mean, to Kringle's point, there are ways like through the prime brokers. I mean, they're able to exit those positions by making calls, by, like when you think of like an option sweep trade or something, right? Like a sweep is basically when you orchestrate a trade to buy options from a number of different exchanges, like at one time at a certain price. It's like they would do similar things to that, right? Like with different brokers, or time their trades to get back into it. But I mean, in this case, when we're talking about like true supply, and we do see that getting low, I mean, I do think that can tilt the advantage in our favor a little bit, even though, to be fair, like that is not the norm whatsoever.
Yeah, like I see it like a tug of war. Is like how far you want to go. Either retail go further than than institutional, whatever. And I really think this whole system, there's a cause and effect. And September was a real situation where a lot of contracts were sold, and I don't know.
Yeah, well, I'm curious real quick, and then we're gonna get to Brian. Sorry, I know you've been waiting for a while now, but I was just curious when we were talking about selling calls back in September. Are they covered calls, or were you selling naked calls?
I mean covered call. I mean no. Calls.
You were
that
buying
I like
calls.
bought in like March.
Okay, you were buying long calls. Yeah.
Yeah. Okay. Calls that I bought like in March that I held and didn't release them in June or whatever.
Oh, okay. You were just
like
okay.
calls
You were
like
closing,
that was
selling to close.
Yeah. Close it like December calls. A lot of December calls or whatever and stuff like that. Yeah.
No, okay, cool. Yeah. No, I just if you were at first you were saying selling calls, I'm like, oh man.
Oh no! I didn't want to get caught. I didn't want to get caught, but whatever. But end up being flat anyway. But whatever. Yeah.
Yeah, I've seen some nasty screen prints of people selling naked calls on AMC.
A lot of fun stuff.
Yeah, man. All right, good stuff. Appreciate it. Brian, what do you got for us?
So I just had a just a couple quick questions. One about like what y'all were just saying about the covered calls. So whenever like in these past 2 months, I have a little over 2,000 shares of AMC. So I've been selling covered calls, not naked covered calls, like selling them. And so I've been making a decent amount of money. I'm not going crazy on them or anything like that, but just to make sure that I'm pretty sure that they wouldn't get covered. I mean, I was like far out, not far out the money, but I was like $50-$60. But I also had a question about the ATER and the whole lawsuit thing with the naked shorts. And I mean, do you think that would affect anyway? Like if it were to become, I guess, like fruition or whatever, if they, okay, yeah, they are doing illegal naked shorts or whatever. Do you think then that would like spark up a whole bunch of other like lawsuits or whatever for like AMC, GME, whatever, all the other ones?
I don't know. So ATR, do you mean like ATER? Is that what?
Yeah, that's the one I was talking about. Yeah, the one where they I guess they came out and said that like they're doing some like lawsuit because like they said that they found or they know that they're doing naked shorting or whatever on their stock.
Yeah, this was the other day. Was I think it was the CEO's name, Yanev like Sarek or something like that. I'm probably butchering the name. And I had discussed this with someone the other night, and he put a tweet out. I don't know if it's if it's still up there, but basically like saying, "Hey, we're doing some research. We've possibly." He did use the qualifier possibly. We've possibly found, come across information that indicates that that there's some naked shorting going on, and across their investigation, and put that on blast. And I, I don't know if I've quite seen that before. Granted, I mean, that doesn't mean it hasn't happened, but it's a pretty bold move, in my opinion, for a CEO to come out and put something like that, even with the qualifier saying we've possibly, to because otherwise it's a definitive statement. But have a can you imagine like Ryan Cohen, Adam Aaron, clearly we're not privy to everything that's going on behind the scenes, and nor are we permitted to be, even as shareholders, because of the various rules regs on by the SEC and how the articles of incorporation for the respective companies, what their corporate governance is. And third, they're not going to show their hand until they're ready to go with the final round. But I would speculate that they're doing things behind the scenes, and they'll come forward when it's time and prudent to do so, and likely follow the letter of the law by doing so. Like every communication, that's given to the public that could possibly have an impact on the security, if you're on the board, you've got to send to the SEC. Was it 48 hours ahead of time or something like that? They have to be notified. That's why Elon Musk got in trouble, for with the SEC so many times, because he didn't clear certain communique as required with the SEC. But the CEO of that company, Yaniv, again, I thought the move was bold. And I meant to follow up today to do some more research to see what the SEC's response was, if anything, because that is something quite frankly that has been discussed a couple of times with some folks in different panels, of which there was some very wrinkled brained apes there. There was some. It's actually a securities attorney and another lawyer there, and that's one of those things that quite literally the SEC says that if we feel there's manipulation or fraud or XYZ, that basically they're like, yeah, we can halt the security and while we investigate. So to me, like bold statement equals like that. If I was a shareholder, it would make me nervous. If I was an ATER shareholder, that someone would just come out and put that on blast because it increases possibly volatility, makes the security perhaps unstable. I mean, Kringle, you can weigh in your thoughts. And quite frankly, if obviously, as I've said before, the government moves at a glacial pace. I mean, in my work with the government in all aspects, it's glacial. That's how it's described. The SEC is methodical as well, but at some point they're going to come across this, and it's one of those few triggers where they could say, "Hey, there's going to be a suspension or a halt for an undetermined amount of time." It's not like it's a circuit breaker where it's X amount of minutes. We're going to halt this for a month, 2 months, until we investigate if there's some wrongdoing here, and that has serious implications on anyone who owns that underlying security.
Right. So like whenever you're saying that, basically like in a snail space, like very, very slowly, it's going to take
glacial.
Yeah.
Glacial is, glaciers don't really move. What is it, over, thousands of years? They move like an inch or fraction of an inch. I mean,
okay, I got you.
But that's how I've always described it, because it's, for example, if you commit a some sort of fraud and the Department of Justice goes after you, I don't know, bank fraud, wire fraud, you name it, whatever it is. They've got 7 years after they to prosecute you. I mean, it's ridiculous that they can move at such a glacial pace. So they can investigate you for 7 years, charge you, investigate, and then don't expect resolution for 7 years in some cases. We see it in other aspects of government as well, in terms of infrastructure and other things, but not just law enforcement, not just regulation. But anyway, I'm digressing here. I don't know if.
No, I mean, I don't think anybody really has a lot of information on it. I just wanted to see if like anybody else had like in this space had any like, I guess, intuition on it. Or I mean, I guess the way I'm thinking about it is, if a CEO of that company is coming out and saying something like that, he obviously has something, because I mean, most CEOs don't even talk about their stock price or any, like most stock CEOs are just like, they stay away from the stock price or anything. Like they don't even want to talk about their stock price because they don't want to get in trouble. They're all about, we're going to try to better our company and this and that and whatever. They don't even mention what's going on with the stock price.
Yeah, in full disclosure, I haven't actually pulled the filings with. I can do it while someone else is speaking, but again, I meant to do it this afternoon, but I got pulled in a million different directions. But their CEO did announce in early October. He says Ethereum takes its fiduciary role seriously. We've hired a third-party firm to investigate illegal naked short selling in our stock. This process takes time. Please stay tuned. That was October 14th of this year. And then, it was the other day where he came out and basically said that they had, potentially found, see if I can find it here.
Yeah, I mean, I'm not in the stock or anything. I just thought it was interesting just to hear from because I mean, I think we all know that it's happening in some form or another, whether it's legal or illegal, because I know there's some forms of legal sorting, or naked sorting, I should say. I mean, I've heard it from, especially from Kringle. I've been on a lot of spaces with Kringle, and Kringle's a super smooth brain ape. I've learned so much from him.
I think you mean Wrinkle. But
Well, yeah, you know what I mean.
but I know, Kringle wants to get a word in, and then I know TP's has had his hand up for a while, so I want to get to him real quick, and then I want to hear from Boss Blunts too, but I feel like he might be having connection issues. Go ahead, Kringle, though.
Yeah, this is going to be my last interference before I go to bed. I received a lot of questions about that. That ATER has exercised 500,000 shares because of a call option, right? But I just want to correct some misunderstandings or misconceptions about that call option, right? Because people do not read filings, and I do understand that, right? Because the filings are actually a bit extensive. But I'm not saying this is bullish. I'd say it's neutral. It doesn't affect us, right? It's not bullish. It's neutral because those 500,000 shares, right, from that call option, it was actually granted if he stayed CEO until 31/10, so until Halloween, right? And those shares were already allocated to their company's employee incentives plan. So they didn't need to those real shares didn't need to be found because they already found. They have already been allocated. So the company didn't need an underwriter to give the real shares back to Adam Aaron because these were already allocated. So in that case, those shares were already in reserve for that call option to be exercised. So nothing gets changed really for us. So I just want to spread that information. Just read through the filings. I mean, I can post something out there for sure, but you have to understand the difference between a share that is dealt on the retail broker when we're talking about options, right? But what we're referring to is the performance share unit, PSU. So a performance share unit done within a company with a share that has already been allocated is equal in value to one share of common stock of said company. And they are generally convertible into shares of common stock. If not, they are already pre-established uh, within the company, and that didn't need an underwriter because those shares were already in reserve for, say, call option that was already granted through their incentives plan for that company. So Adam Aaron, for us, with that with that call being exercised, it doesn't affect the stock.
Yeah, that's a really good point. I mean, I know. Yeah, I mentioned it a little bit earlier, but yeah, I mean, I'm aware of that. Like, I mean, if there's when executives are granted those options, like it's obviously at a lower price. I mean, they were at a way lower price. Like those shares are set aside. It's not an open market purchase. It does not impact the security price, anything. It's just an exercise of the option. And I mean, in this case, I think those like one of the conditions to be exercised was that he continued to be employed there as of October 31st. He exercised it the next day. So I mean, it's not necessarily newsworthy. I know it just came across everybody's news feed, so I wanted to mention it. But
yeah, it was kind of funny because people were crazy about it for an entire hour. I was like, no, that's not what happened.
yeah, no, I mean, well, that's the thing, because I mean, I like you. I mean, I see the file, like I read the filings, like I see them when they come across, and yeah, I try to get some of that out. So I definitely appreciate that.
So we see the matrix, but we're learning people to learn how to see the matrix.
All right.
Red or blue pill, my friend.
Hey, TPs, or what you got for it?
Hey, Kringle, before you leave, I just had a question. So the one thing I took from listening earlier to, I guess the gentleman was VwapTrader, I think is what he was. Is that what his name was?
VwapTrader.
Yeah,
VwapTrader.
Yeah.
So the two things I took from it is, one, you know, it sounded more like he was a market maker, but he was basically taking almost like a SPAC or extra shares that a family owned and actually selling them and getting a certain price for them, almost kind of like what Adam Aaron is doing right now, where they'll push a stock up or get hype about it and then short it down. But the one thing I took from all of it is that, you know, he kept talking about, you know, he would force you with all the tools that he had to short it a little bit more, move you down to the price you want to buy out, and then you're chasing your tail of him. But what we've done here by just buying and holding is literally they've been trying to do that for the last 3 or 4 months to us, and just that's all they're doing is just trying to use their tools against us to make us chase them down, and we're not doing it. I mean, am I think of that correctly, or am I wrong on that?
Yeah, market makers are professional duck trainers, I'd say. They let us chase stocks. That's what they do to retail. But if you read between the lines, if you read the bids, if you read the ask, right? So whenever you try to sell a stock at a certain price, then eventually the ask just goes down, and you would be, in order to exit your big positions, you would have to reduce your ask, and eventually keep climbing down, and that's why they initiate sellouts of the price of the security, right? So it goes also on the other side as well when they have to increase the bids to basically force a bigger demand of the stock, because that's how they build FOMO, right? But that's basically their business model. So he said along in this he said in the interview that he usually likes to, let's say in quotation mark, pump the stocks in pre-market and in the early hours of trading. Then eventually they would have to short it down, to generate liquidity and create movement of the stock seemingly to trade. But there's always a middleman, and that is a market maker.
And they have that symbiosis, that symbiotic relationship, which is clear, and he underscored.
Yeah, and I thought it was interesting though when he was talking about, he would trap shorts because they're buyers. They're going to be a lot of buying after that just to run the stock up, and that was the way he was. It's interesting, thinking about that terminology. You got hedge funds and market makers. They may be the same name, but they may not be playing with each other at one point.
Right. Yeah, he's completely out of my league. That's why I said that market makers are the number one enemy of funds, right, in retail, because they get to control the flow of level 2s because they are at level 3, but there's not, like you said, there isn't a distinctive difference between level 2 and level 3, right? But they have privileges and exemption rules to their favor to create or drive down markets, essentially.
Appreciate it. It's an honor talking to you guys.
Yeah.
I'm gonna step down.
Yeah, thank you. Yeah, thanks for coming up.
I think that's the biggest thing that market makers have, the short exempt. That is the killer. That is their killer, like, hammer towards everyone, I believe.
We're seeing a lot of things that are being misused. There's some regulations that need to be actually put in place to keep this misuse from happening. And, it's going to take time, but that's what we're all fighting for. That is exactly what we're all fighting for. We are not fighting necessarily for MOAS. This is going to be, that's the benefit of this, rather than the end game. The end game is to actually create a more fair market, in my opinion.
Yeah, no, I totally agree. I mean, that's one of the things we've talked about for like a while on here. I think is that, yeah, I mean, obviously I think most of us here are invested in a couple of stocks. We're probably invested in a lot more than that, or some of us, but maybe not. But yeah, I mean, I think it's incredible the way over this past year here now. Time gets away from me. I can't believe it's like November. I'm like, oh yeah, it's a few months. Like Citadel was saying earlier, it's like, yeah, it feels like it's been 2 years since January, and it really does. But how the amount that we've learned about market structure and digging into rules, digging into the way things work, our understanding of structure, alternative trading systems, all the different players, like even relatively basic things about shares of brokers being held in a street name versus being registered to you, and the DTCC is a clearing corp, and Seed and Co, and prime broker relationships, market makers. I mean, I feel like for a lot of people here, like if we went over all those terms like a year ago, like nobody would know what the hell we're talking about. But I think, I would bet that, 80-90% of the people in here know what all that is. So it's the education is incredible, and I think that's one of the things that we're all about here. Like, we still certainly have a lot to learn. Not to continue to plug it, but that the interview that Crinkle had earlier was really good. I think I'm gonna listen to it again. VwapTrader definitely has a lot to share, and it's one of those things where if you listen to it once, it will go over your head. But no, I think it's a great point. I mean, MOAS is the reward. It's not necessarily the goal. It is a goal, certainly, but I think with everything that everybody has learned, like that's part of the reason why there's such a huge community aspect to it, is because we do want fairness and transparency in the markets. And I mean, I think I've shared this before, but I was a auditor for a number of years, like audited public companies, did their financial statements, like for, basically their Ks and their Qs, all the filings that come out. And I mean, I always thought that I was, supporting the transparency and fairness of the markets, and to a certain extent I was. Obviously, there's such a thing as corporate fraud, and I mean, we've seen it, over the years, but with everything that I've been seeing in this past year, I feel like there's a much higher order to that, and this is something that deserves a lot of attention. So that's a great point.
I completely echo your sentiments, amigo. And I will be tweeting out a link to Kringle's interview with the VwapTrader or JJ, etc. At the conclusion, to make sure that if folks want to go check it out, it was something I'll definitely have to replay again, because honestly, it was. I sent him a note afterwards. It was super refreshing for once to hear someone from that has that much experience from the inside, not holding anything back. I mean, he was not filtering or doing a how do you say, like doing the like industry double step. It was like he told you what he thought right off the cuff, and it was absolutely 100% refreshing.
It's been double speak. It's called double speak, where you're talking something.
Yeah.
Okay. But anyways, please
100%.
please retweet that. I would love to actually hear that. Besides that, like, I'm gonna go ahead and go, but like, it's been great.
Yeah, awesome. Thank you. Yeah, I appreciate you coming up.
All right. Well, everybody have a nice night.
You too, man. Thanks for popping up.
Yeah. Bye.
All right. Any other kind of questions, comments, anything? I know. I don't know. We've been going for a while here. We may have run out of original material, but I think we're happy to keep talking.
I'm skimming YouTube. There were a couple of questions in the chat that I'm double checking.
Oh yeah, that's right. There was one. Yeah, there was one good one. I saw you said we'd get to it. I don't know that I have a perfect answer, but I thought it was a really good question.
If you recall the question, fire away, because I'm scanning my notes here real
Yeah,
quick.
I'm gonna have to scroll on it. Had it something to do with the SPY.
I thought I had it. Was it the shorting the SPY one? This is the if the big guys are shorting the S&P and looking for a market downturn, why is the market still going up? Isn't big money short on the market right now?
Yeah, I mean, I don't know. Yes and no. It's one of those things. It's like when we look at the filings. I mean, it seems like when you look at like the 13Fs, the 13Gs, it's like they have positions everywhere, right? Like even with like an AMC or a GME, like they'll be holding shares, they'll have calls, and they'll have puts. When we talk about like the big money shorting the market, I think what a lot of people are seeing, or what I've heard a lot, because I just don't have time to study the chain like as much as I should. But I think that there are a lot of puts out there, into next year. So like April, June dated puts. So it's not necessarily like a true short in that they're, actively shorting the shares, like borrowing and pushing it down. It may just be that the call put open interest is a little bit more slided to the put side than that otherwise would be. So I mean, I think that's part of the reason. I mean, we talked a little bit about the Fed meeting earlier today, and light monetary policy, and they're not increasing interest rates. Like it was amazing. I mean, if you saw like right around 2 p.m. like on a 1 minute or a 5 minute chart, I mean, you just saw like a straight line up on so many things. I mean, SPY, IWM, Russell 1000, NASDAQ 100, and even a lot of individual stocks, because the Fed put their statement out. And so, there may be some big money that is actually short the market, but I mean, I think it's likely more just synthetic shorts, like in the options chain, or just higher put interest going into the future is my take.
I mean, we're of the same mind there. My opinion really doesn't actually differ. You took the my thoughts exactly. If anyone else wants to come up, questions, comments, concerns, by all means. I'm just double checking any questions I got in my inbox. Some have already been addressed, so I'm just taking a moment to filter through. I apologize. Yeah, the rest of the questions, call for basically a lot of speculation. Like, why would someone go in, big on AMC versus GME? And I can't speculate on someone else's decision, how they choose to invest. And it's a polarizing or divisive question in general. I'm in both securities, so it really it doesn't matter to me what someone else buys heavy into. And there's been a couple of variants of that question, but let's see. I think that brings me up to date on all the questions I have, unless anyone else here wants to pop up, has any questions. Yeah. Although Boss Blunts is here, I don't know. Did he want to pop up? Oh, there he is.
Yeah, there he is.
He is always welcome. Let's see if we can actually get him through this time. I'm fairly certain I hear 90% of your ride and 10% of you.
Oh, I feel like he might be having connection issues. I know he tried a couple of times earlier.
Yeah, I definitely heard whatever he was driving versus him. So if he doesn't have any connection, if he pops back shortly, if not, we'll circle back to him on the next one. Unfortunately,
That's a good one. That's a good topic there. Like I saw Johnny in the YouTube chat. You know, Zillow tanking. I think we may have talked about that the other night a little bit, but yeah, I mean it's insane, right? They I've seen so many articles on that the past few days, and it's kind of hilarious because it's one of the things we've been talking about, like from a macro perspective. I mean, I personally had some concern about BlackRock like buying up a lot of properties and their intent in that long term, in terms of likely not selling them and just renting them out to people, and with real estate being what it is and being limited in a sense, and kind of the implications that has to the everyday person, long term, like being able to buy property or acquire property with the prices, being what they are. But yeah, so here you have Zillow entering this market within the past year and using their own platform and data to, attempt to flip houses on the uptick. And then, coming into their quarter, apparently, they lost a bunch of money on that. Flipped them to a net loss position overall. They decided that they were going to stop buying those houses, and they apparently laid off 25% of their workforce. So, I guess they don't know what they're doing after all.
or it's not as easy as they make it seem. Flipping houses on reality TV, apparently.
I know, right? I mean, I thought if you just watched like enough HGTV, like you could just be a pro, right? I mean, that's the way it was back in the mid 2000s.
Yeah, and I don't know if you've been tracking it in New England, especially like in Boston. I live in Boston, like a place south of the city as well. But I mean, it was like mid 2000s all over again down here. I mean, we talked about it before, but one of my neighbors, they sold their house. I mean, I know what they paid for it. 5 years ago, and I mean, they got not quite, but almost like double the money. Like they got like 1.2, and it's not worth 1.2 in my opinion. Like straight cash, no contingencies. Closed in like 15 days. It was ridiculous, but apparently my neighbors have it easy. They figured out how to do it, but Zillow didn't. But Boss is back. Hopefully we can hear him. What's going on, brother?
My mic is tweaking out bad. It's like every time I try to speak, I don't even know if you can hear me right now, but every time I try, it just kicks me out. So I apologize for that.
No, man, we got you. You're here.
We're getting most of you. Yeah.
Can you guys hear me at all, or no?
Yeah, we can.
Yeah. Now we can.
Oh, we could.
We'll give him another second. Sidebar.
Sorry,
Well, you back?
I can't hear anything now. My apologies. Every time I try to speak, my audio goes out. I can't hear you guys. So again, I'm sorry. I can't really hop in on this one.
No
I just
worries.
wanted to ask about delimit order types. In case you can hear me, I'm going to jump out and jump right back in. I wanted to ask what your thoughts were on the new haircut regulations, delimit order types, and the most recent $1 trillion margin for the top 34 banks, margin requirements, and then the increased margin requirements for the rest of them.
So I mean, I caught a little bit of that. He was asking, wanted to get our thoughts on delimit order types and some of the, bigger margin requirements for the top banks. The delimit, I mean, is interesting. I mean, I know I followed the case last week. SEC versus Citadel, like a lot of the hearings. I mean, it sounded sounded pretty bullish overall, and I mean, it sounded like the Citadel lawyers were getting their ass kicked. I mean, in terms of the specific mechanics of the delimit order type, I mean, it's interesting because I mean, it does offer that provision, I guess, to pull back a little bit momentarily, like if market makers tried to move the bid and ask spread. But I mean, I think that, I mean, for me, like the biggest point that I got out of the case, I guess the summary was market makers are the only ones that stand to gain off of that, right? Like we talked about a little bit the other night, like when it comes to latency arbitrage, that you see what they're doing, like with their data centers and getting them closer and closer. I mean, even Citadel's moves like significant operations to New York because they can get better latency there than they can from Chicago, and they're really the only ones that stand to gain from those microsecond differences. And so, I mean, I definitely, I mean, I'm in favor of it. I mean, it seems to protect retail to me. I think IEX is trying to do the right thing. In terms of the margin requirements, I don't know. I mean, it'll be interesting to see what kind of effect it has. I mean, it's always really hard to tell for me because I'm not always into the deep mechanics of it. I mean, I try to follow these things as closely as I can, but I'll say I only have like really a couple hours a day to do, solid research because I have the day job and everything else. So it's, deep interpretation of those rules is difficult. It seems like a lot of things have to do with like moving requirements around in terms of the quality of the securities that are allowed to be put up as collateral. We talked about that, one of the new DTC rules, I believe, last night. Just putting different haircuts on different security and bond classes. But I mean, in theory, I mean, I clearly think it's a good thing because they shouldn't be allowed to play for free, right? Like banks should not be allowed to essentially play for free on this kind of ridiculous leverage, ridiculous margin, like with other people's money. And I think the way that derivatives have evolved is really what's obfuscating the market so much. And it's one of the things we talked about earlier is that a lot of the things that are going on with the market, like the valuations and everything that we're seeing, it doesn't seem to make sense. And I think it's because in a lot of ways, the real market these days is in derivatives, and the underlying seems to follow the derivative, which is just really counterintuitive. But I don't know, Citadel, if you have anything to add there.
Yeah, we're pretty much on the same page. I have to do more research because there are I have thoughts. Well, my original thoughts on the IEX, were generally positive in nature, based on my research from recent research and some documentaries I watched a while back, and some folks I talked to that I value their opinion, and the idea of what they were trying and are doing, is noble, and I dig it. But some recent things have come to light that I'm looking into, that that there's some that things may not be as they seem. I mean, nothing ever really is, but the argument's being made that perhaps there's some things about it that aren't so great. And I'm not going to go into it right now, obviously, because we're an hour and some time into this, and it's I need to feel like I'm better versed. but there's a couple folks on Twitter and on Reddit that have posted some DD on it, and there's some stuff that I've pulled from some of their documentation about how they've addressed some of the concerns, and I have yet to form an opinion. But what I do know is that the notion, my opinion is not as like peachy as it was. If there's any merit to some of these claims, and I'm not a fan of latency arbitrage. I mean, but honestly, what are we going to do about it? It's the system is rigged, and I don't mean that in a like conspiracy tinfoil hat way. It's the way the game. It's what it. Don't hate the player, hate the game. And it's not. It's like going to Vegas. It's house rules. It favors the game favors the house, and unfortunately, that's just the way it appears to be. But that it's going to be a separate podcast and DD thing that I'm going to do on IEX and delimit. I don't want to speculate when, because I don't know what my schedule is going to be like for the next couple of weeks. But it's been something I've been researching. As for like derivatives, that's a whole other thing. But the increased margin requirements and collateralizing them, in principle, I think is about time. However, I worry about you're from the accounting world, so there's an equal and offsetting entry for everything, right? So if now there are these increased margin requirements or collateral on these derivatives, it's got to come from somewhere. It's not like they're just going to print like $3 trillion or something and be like, hooray, we meet margin requirements. No, they're going to have to find ways to do that. And with the crypto 1 to 100 leverage, that's an easy way to, quite literally, like print money. Is by using HFTs or different algos and just I don't want to say pump and dump, but we all see it on Fridays, for the weekend, and the various ways cryptos take off and then suddenly tank. I'm speculating that it correlates, but to come up with that kind of money means that a number of things have to happen, and I'm not sure if any of those things are good, bad, or otherwise at this juncture, because we don't know the source of the collateral or source of funds.
Yeah, no, that's a really good point. I don't know. I talked before. My first when I first learned about derivatives, it was in accounting class, and it was about how you account for a derivative. If it's classified as a hedging derivative versus if it's classified as a cash flow derivative. But that was 15 years ago. The rules have changed and blah blah blah. But actually, probably more than that. But anyway.
It was the same thing. How they can simply miscategorize something as short versus long. It's subject to interpretation. Whether or not you'd sign off on that auto report, I don't know. But one could say that the argument can be made just for that simple ambiguous change of nomenclature or category.
Mm-hmm. Yeah, but to your point, I think it's a good one over crypto, and there's it is. It's somewhat speculative, but I think a lot of people have made the connection in terms of if you've got to come up with, cash or cash equivalent, like as collateral for that, then that's certainly a thing. I guess the other the alternative might be to reduce naked derivatives. Right, like just literally reduce your positions on both sides to where you're not just leveraged to the tits on both sides, like betting these huge amounts. Just reduce your overall exposure. But I don't know, they might look at that as giving up.
I mean, that's not living on the edge, man. Are you really living unless you're levered? Levered to the hilt. That's not living, man. It's not the American way.
I know. You want to know what's even more fun than betting with your money? Betting with other people's money. because you can lose, man, but can you really lose?
I mean, yeah, it's only people's pensions and 401ks and retirements, and there may not be another Wall Street bailout, but at least you've still got the yacht and the place in the Caymans and money. So it's not.
Hey man,
you're playing with house money.
If someone's pension goes to zero in a forest and there's no one there to see it, did it really go to zero?
I was gonna say something similar. Like, if there's no 401k auditor, did it really go to zero? Like, oh man,
philosophy stream.
What's that?
Philosophy stream.
I know, that could be a whole other segment. Let's see. I don't have any other questions coming through YouTube, unless anyone else has any other questions, comments, concerns. I'll check here. No, I guess not. Nope. Looks like that's. I mean, there's an active discussion on the YouTube chat, but I don't see other questions rolling through. But I think I'm going to call it an evening. We're approaching almost 2 hours now, so.
Yeah, that sounds good. Well, I mean, exciting day overall, like in the markets, I think. I mean, it's, like I said, I joked at the beginning, another day of trading sideways. We'll see. Yeah.
Yeah, predictions on, I'm going to put you on the spot. Predictions on tomorrow?
Yeah, no predictions. I predict that I'm going to hold.
Yeah, no, I predict the same. It's not Friday. We all know what happens on Fridays, but tomorrow should be an interesting day. Thursdays are a wild card. We'll see. Actually, Tyson wants to know if we talked about cycle theory. But I'm not going to circle back to that at this juncture, because he opted to go bowling instead of actively participating in this this panel this evening. So we will circle back to cycle theory on the next cast, if that's okay with Halister, unless you really want to go into it for Tyson.
No, I'm good with that. I'll say, yeah. I think we touched on it briefly, but yeah,
he's
got a hole in it. I mean, hopefully
he's got a hole. I'm sorry. Go ahead.
No, well, hopefully you hit a few strikes or something.
I don't know. I just know I did not get an invite to go bowling, so I'm inclined to defer this his cycle theory request until next time. And I don't know. Feeling a little left out. We're here holding the fort down, and everyone else is bowling. Ken is on vacation that's unapproved from Karen and HR are still looking for. I don't know what's going on. Things are falling apart.
Nah, better than ever.
Tyson wants us to know that he made money at bowling this evening. That's great. We'll end on that note. Thank you very much, Tyson. I'm so glad that you made money at bowling this evening. I have not made any money during this YouTube, but that's okay. I don't need to tout my achievements or how well I bowl or if I made any money today. So I'm good with that.
Looks like we may have one last question. We're going to take one last question.
Sure, bring it on.
All right.
Tyson claims he had a lot of strikes, but trust but verify, do your own due diligence, not bowling advice. So picks or it didn't happen. That's all I'm going to say.
Little Devil, you're up.
it's not really a question. I just want to thank you guys for putting your time in, teaching everyone around here everything that you guys know. Like I have, when I first got into the market stuff, I had no idea what I was doing at all. But I just want to thank you guys for putting on the spaces and putting your time in, and just in general, just thank you guys for your time. I really, really appreciate it. And I know that there's a lot of us out there that truly appreciate everything that you guys do.
Oh, that's awesome, man. Thank you for the kind words. I'm accustomed. I mean, I'm kind of numb to it at this point. I usually get the being called a shill at least 20 times a day. So it's refreshing to hear something nice. I appreciate that. All of us. I mean, I don't want to speak for everyone, but all of us at Bull House enjoy what we do and take some pride in it. And I do have Tyson to thank for kind of bringing me into the Bull House, and I was reticent at first, and because I've been asked to join a whole bunch of different places, but it's got some good people. The vibe's good, and I enjoy putting out FUD and memeing or trolling with the best of them. So, I appreciate the feedback, man. It's good to hear. Thank you, and we appreciate you tuning in, hanging out, and having a discussion with us.
Yeah, absolutely, man. Thank you. We appreciate it.
All right. Well, unless there's anything else, they're still talking about bowling and YouTube and how great Tyson is at bowling. So I think I'm going to call it a night myself. I believe tomorrow Ken is doing something despite being off Nifty NFT, I believe. Don't hold me to it 100%, but there'll be a tweet about it or an announcement of sorts of what's coming up tomorrow, because I'm not available on Friday, so to cover. So, but I think she and or someone else is doing something about NFTs tomorrow. I could be mistaken, but either way, I'll send the tweet out or she will. Cool. The Halister, as always, thank you for your time.
Oh yeah, absolutely, man. Glad to be here.
Just have the aforementioned company send the usual hourly rate bill to my office, and we'll make sure it's taken care of.
Excellent. Yes, the invoice will be. You'll see it tomorrow morning, sir.
And it'll be 120 days before I pay it. Don't you worry.
I'll send you to collections.
Just like everyone else, man. I haven't, Kenny hasn't paid me in 6 months, man. He gives me Bojangles gift cards that are, supposedly have money on them, but they're never activated. The last one he gave me at 27 cents on it. What can I buy at Bojangles, to go for 27 cents?
Well, he's just trying to naked short sell jet fuel futures so we can get a cheaper rate.
He's in for a rude awakening if with the inflation and the cost of operating our jet. It's going to be a rude awakening. Nonetheless, that's for another evening. But thanks everyone for checking in, and we will catch you tomorrow. Maybe not me, but we'll be here tomorrow, and then if not, I will see you all later in the week. Have a good evening.
Night, everyone. Thanks, guys.
Yes, it's confirmed. Nifty APER, Nifty NFT tomorrow, apparently. So I won't probably speak to y'all until